Right. The topic what we are going to discuss today is chapter number one, accounting for partnership firms. We call this as fundamentals. Okay, the very first chapter is fundamentals. Okay, so here you are going to learn about the basics. So accounting for partnership firms fundamentals. So here what you're going to learn, if you ask, you'll first have a clarity about what is a partnership business all about, the meaning of partnership, and also the definition of your partnership. So meaning and definition of partnership you'll be learning from this chapter. And then you'll learn some essential features or characteristics of partnership. Obviously this you have learned in your grade 11 under BST. Again you'll be learning in accountancy. Then you will have to understand what are the rights that a partner can enjoy, and then the partnership deed. So what does a deed means? Partnership deed means what it is and how a deed can be, whether it can be in oral form or it could be in a written form. Meaning of the partnership deed and the clause. Yes, correct, it is a written document. Okay, so partnership deed, a written document, and what are the clauses? Clauses in the sense, what are the subheadings or important items that has to be recorded in a partnership deeds? And then we'll come across something called Provisions of Partnership Act 1932 that will affect the accounting treatment in the absence of a partnership deed. So basically, for partnership business, the deed is not compulsory. Okay, that means it can be there or it need not be there. If you don't have a partnership deed, then you will not have certain privileges, or if there is no partnership deed, certain items will not be either allowed or it will not be charged. We are going to see what are those. Okay, there are some list of 5 to 6 items which will not be allowed or which might be allowed if partnership deed is not available. And then some important treatment of interest on loan by the partner to the firm and by the firm to the partner. So in this chapter you will be coming across something like the treatment of loan that has been provided by number one, partner the firm, and vice versa, firm to partner. So usually the firm will be borrowing the money. That is what we are seeing. But in partnership, we have two way, firm getting the money from the partner, or partner is getting the help of the firm for their requirements. So the two-way treatment you'll come across, and how to calculate the interest on such loan. And then the most important, distribution of profit. Usually what makes a difference between a partnership firm and a sole proprietor is distribution of profits. In a sole proprietorship, whether you earned profit or you incurred a loss, the entire amount will be provided to that particular individual. In the sole proprietorship, whether you have earned profit or you have suffered a loss, everything has to be dumped to that one individual who is a proprietor of the business. But in partnership, the ultimate objective of the business to earn profit, of course, all times we cannot expect profit alone. Sometimes the business will incur a loss. Whatever be the net result is, whether profit or loss, how the amount will be distributed among the partners, because we have something called as profit sharing ratio. As I said, initially you might have started a business with a minimum required person of 2, but later you might increase your number of partners, and initially you may treat everyone as equal whether they have provided capital to the business or not. But later on you feel that some changes should be there, okay, or something should be given in return to those partner who has provided more capital. So as a result of this, you will change your profit sharing ratio, and as the profit sharing ratio changes, then we have to look into it how to distribute the earned profits. So last year, for example, they are given you 2 years, 2023 and 2024. Let us take for example. Okay, you have got two partners, namely A and B, and initially they are considered to be as equal partners. They have started the business on 1/4/2023, and their first year is getting completed by 31st of March 2024. Okay, this is their first year. In this first year, they have earned a profit of rupees 4 lakhs. Okay, they earned a profit of rupees 4 lakhs. Now, how to distribute this 4 lakhs between A and B? How will you distribute this value of rupees 4 lakh among A and B? Okay, so for A, it will be 2 lakhs, and for B also it will be rupees 2 lakhs. Right. So, for example, same category, the same example, let's see how it will be if they move to the next year and they make some changes. A and B are not an equal partners right now. A and B are sharing the profits and losses in the ratio of 3:1. Okay. And they are now in the second year, which means it will be from 1/4/2024, and it runs up to 31/3/2025. And in this year also, they have earned a profit of rupees 4 lakhs, say for example. So now, how to distribute this profit? How the distribution of this profit 4 lakh will take place among A and among B? How much A will get and how much B will get? Very good. So 3 lakh, 1 lakh. How do you do it? It is very simple. The net amount is 4 lakh. Okay, for A, this 4 lakh should be distributed in the ratio of 3 by 4, and for B, it will be as 4 lakh into 1 by 4. So this will give you rupees 3 lakh and rupees 1 lakh. So now you can see a variation. When they are equal partners, they are getting the profits as 2 lakhs each. But when they fine tune their profit sharing ratio from equal to some agreed ratio, then they find that there is a change in the distribution of profits. So the distribution of profits, how to be done based on the profit sharing ratio and where it has to be done. So distribution will be taking place in some proportion and where it should be shown. In sole proprietorship, we have learned something called as final accounts, where you have three level stages: preparation of trading account, profit and loss account, and balance sheet. Obviously, what you did, your profit and loss account will provide you the net result of the business, whether it is a net profit or net loss. Once you have completed that particular concept, then you have preparing the balance sheet. While preparation of balance sheet, what you do, you are just adding the amount of net profit along with your capital. If you have incurred a loss, you will subtract the amount from your capital. So thereby what happens? The net result is getting added to the capital and there ends. So distribution also has taken place. We have shown the distribution takes place Whatever the profit you earned, you're adding to the partner's capital, or whatever the loss that has been incurred, you're subtracting from the capital of the partner, from the individual. So this is how it happens in a sole proprietorship. But in partnership, we can't do like that. Whatever the net profit you have got, just go and add with the capital. Unlike your sole proprietorship, here it is not possible. The reason is each and every individual in the partnership might have contributed some amount as capital, or the members in the partnership might have not contributed some amount, okay, which is required as capital, but still they would have been admitted for the purpose, like they are very knowledgeable in a particular field, they have more experience, and they are loyal. Some quality they might have, for that purpose they would have got admitted as a partner. So in partnership business, two things you should remember. Usually the business will be recording the account, okay, or accounting process will be done for the business, okay, and only from the viewpoint of the business. This is what we learned in 11th standard. Okay, all the business transactions, or what all the transactions have been recorded only from the business point of view. But in partnership alone, we will follow these two methods. One, you will be recording everything from the business point of view, and simultaneously, we will also be recording all the transactions from the owner's point of view, that is, from the partner's point of view. And in this unit alone, that is in partnership, okay, accounting alone, you will come across one additional or one extra steps before preparing your balance sheet, that is something called as preparation of profit and loss appropriation account. I repeat it. In all the other type of business, we'll prepare trading profit and loss account and balance sheet, but in partnership business alone, we will have to prepare one additional or one extra account that we call them as profit and loss appropriation account. And remember, this is the account which is being prepared in order to show the distribution of profit or loss among the partners. ஸோ நமக்கு வந்திருக்கிற ப்ராஃபிட் இல்லட்டாக்க லாஸை எப்படி டிஸ்ட்ரிபியூட் பண்ணுறதுங்கிறத எங்கே காட்டுவோம்னா ப்ராஃபிட் அண்ட் லாஸ் அப்ராப்ரியேஷன் அக்கௌண்ட்டில் தான் காட்டுவோம். ஓகே, நமக்கு சோல் ப்ரொப்ரைட்டர்ஷிப்பில் இந்த மாதிரி ஒரு அக்கௌண்ட் படிச்சதும் கிடையாது, இந்த மாதிரி ஒரு அக்கௌண்ட் போட வேண்டிய நெசசிட்டியும் கிடையாது. அதனால லாஸ்ட் இயரில் நம்ம வந்து ப்ராஃபிட் அண்ட் லாஸ் அக்கௌண்ட் அப்புறமா பேலன்ஸ் ஷீட் பண்ணோம். பட் இன் திஸ் இயர் இன் பார்ட்னர்ஷிப், ப்ளீஸ் ரிமெம்பர், you have to prepare something called as profit and loss appropriation account. Okay, what is the name of the account? What's the name of the account? Very good. So the name of the account is profit and loss appropriation account. Okay, and what is the ultimate purpose of this account is to show the distribution of profits or losses among the partners along with some appropriation items. We have something called as item of appropriation. Okay, so in this particular account only we are going to showcase how it will be distributed or how it will be collected. Okay, so it is an account prepared only for the purpose of distribution. That is the ultimate objective of preparing profit and loss appropriation account. So you can probably make a note, profit and loss appropriation account is for distribution purpose. Profit and loss appropriation account, this is used for distribution purpose. What are you going to distribute? Either profit or loss. Along with this, you will find these items will be appearing in this account. In addition to this, you will also come across the items such as interest on partners capital, interest on partners drawings. The next item will be as partners remuneration. Okay, the term is called as partners remuneration. Remember, there are only two remuneration which a partner can receive from the business. They are number one, salary, number two, commission. So partners remuneration includes only these two items. It is not that all partner will be eligible for both salary and commission. Majority it will be in such a way like any one out of these two will be eligible. Very rare cases, some partners will be eligible for both salary and commission. So salary and commission, these two form part of your remuneration, but in practical, okay, problems what we are going to see, any one will be allowed to a particular partner, not both, but it is not customary or it is not compulsory that only one should be allowed to a partner, not the both. In some cases, a partner might receive both salary as well as commission, right? Okay. The next one, if you see, it is transferred to reserve. Okay. So interest on capital, interest on partners drawings, partners remuneration, that is salary or commission, and then transfer to general reserve. And finally, okay, the profit whatever you have got or loss whatever you got will get distributed. So these are the items which we need to keep in mind. So profit and loss appropriation account is not only meant for distribution of profit or loss. In addition to that, the various other items which will be forming part of your profit and loss appropriation account are interest on partners capital, interest on partners drawings, partners remuneration, which includes salary or commission or even both, and then amount transferring to general reserve. So all these are the items which will be distributed among the partners. For the distribution purpose, we will prepare an account called as profit and loss appropriation account. Any doubt so far? Right. So moving further, the special aspects of partnership account. What are the special aspects? So as you can see, partners capital account preparation. So you would have learned something called as preparing a capital account in your grade 11 based on a journal entry. For example, in 11th standard, okay, you will have come across a transaction called as Mr. X started business with cash rupees 1 lakh. Okay, suppose this is a transaction. Now, if they ask you to prepare the necessary ledger account, obviously the journal would have been for this is cash account is debited to Mr. X capital account 1 lakh. This will be the journal. Okay, now as you know, only two ledger can be prepared from this transaction or from this journal entry. One is cash account and Mr. X capital account. So we will see Mr. X capital account. Okay, we're just going to prepare Mr. X capital account. So a normal T-shaped ledger, debit side, credit side. So what has happened to capital over here in the journal? It has got credited. So from this debit, cash account will be selected and you will drop it on the credit side as by cash account. Okay, you'll be recording here as by cash account 1 lakh. So that's it. This is only item. You'll record it and you'll do the balancing. So you'll record here as to balance C bar the 1 lakh and both the sides will show 1 lakh. And this C bar D will be brought down to the other side as by balance B bar D 1 lakh. So this is how you have learned to prepare the capital account, okay, or any other account when they have been asked to do it in grade 11. But in grade 12, we will have to prepare the capital account of partners and it will have almost same replica but with some extra columns, okay, because this is for one partner, sorry, this is for one individual, it is for a sole proprietor. If it is going to be for a partner, then minimum 2% or maximum it could be 50%. In partnership, minimum is 2 and the maximum is 50 members. So having 50 columns in a paper is not possible. So practically speaking, okay, when it comes to pen and paper, when we write any examination, whether it is CA exam or CMA or ACS or whether it's a school level examinations, the maximum number of partners can be given in a question paper is 4 or 5 ultimate, not beyond that, because the space will not be appropriate. It won't be okay convenient. But in reality, as you have minimum and maximum range, minimum 2 partner and maximum 50 partners, okay, you could find the ledger account, that is a partner's capital account will be little bit huge in size. So you will be learning the methods, that is, you'll be learning the format of the capital account of a partner under two different methods. So in partnership, we have got two methods to prepare the capital of the partners. So what are those methods if you ask? Just make a note of it. Partners capital account. Partners capital account preparing methods. So you have got two methods basically. Okay, there are two methods in preparing partners capital account. What are they if you ask? Number one, we name them as partners. Okay, capital is maintained under the fixed method. No, not partner, sorry. The first one is fixed method. Okay, the first method is called as fixed method and the other method is called as fluctuating method. Okay, there are two methods. One is fixed method and other is fluctuating method. So how many methods are there in preparing partners capital? In preparing the partners capital, how many methods you have got? Two methods. What are they? Okay. Now let's go in detail what we are going to do under this. In the fixed method, you have to prepare two subledgers. Okay, under this method, if you are going to follow the fixed capital method, okay, then under this category of fixed capital method, you will have to follow or you have to prepare two ledgers. What are if you ask? One is partners capital account and the another one is, okay, partner's current account. So in fixed method, if suppose the business is following the fixed capital method, then you have to prepare two ledgers. One named as partner's capital account. The second one is named as partner's current account. These are the two ledgers to be prepared under the fixed method. Whereas if it is going to be a fluctuating method, then you need to prepare only one ledger account that we call them as partner's capital account. What do we call them as? We call them as partners capital account. So we are going to learn the contents, the format in detail, how to prepare partners capital account, how to prepare partners current account, if it is a fixed method. Suppose if it is a fluctuating method, then only one ledger to be prepared as it is mentioned. It's called partners capital account. Now you may ask, sir, அப்போ ஃபிக்ஸ்டு மெத்தட்லேயும் நமக்கு பார்ட்னர்ஸ் கேபிட்டல் ஒன்று வருது, ஃப்ளக்சுவேட்டிங் மெத்தட்லேயும் நமக்கு அதே பார்ட்னர்ஸ் கேபிட்டல் வருது, அப்போது இந்த ரெண்டு மெத்தட்லேயும் ப்ரிப்பேர் பண்ணுற இந்த கேபிட்டல் அக்கௌண்டோட ஃபார்மேட் சேமா அப்படின்னு கேட்டிங்கன்னா நோ, there will be a difference. Okay, there will be a difference. So fixed capital மெத்தடில் ப்ரிப்பேர் பண்ணுற பார்ட்னரோட கேபிட்டல் அக்கௌண்ட்டுக்கும் ஃப்ளக்சுவேட்டிங் மெத்தடில் நம்ம ரெப்ரசன்ட் பண்ணுற பார்ட்னரோட கேபிட்டல் அக்கௌண்ட்டுக்கும் vast difference is there. They both are not one and the same. Even though the name remember, okay, represents same, like partners capital account, but the content in fixed capital method, okay, is different from that of the content of the partners capital account maintained and the fluctuating method is different. Okay, so don't get confused. இந்த மெத்தடுக்கும் இந்த மெத்தடுக்கும் ஒரே தான், பார்ட்னர்ஸ் கேபிட்டலும் சேம் தான். நோ, இதில் ப்ரிப்பேர் பண்ணுற பார்ட்னர்ஸ் கேபிட்டல் அக்கௌண்ட் இஸ் என்டையர்லி டிஃப்ரெண்ட் ஃப்ரம் த ஒன் விச் வில் பி ப்ரிப்பேரிங் இன் ஃப்ளக்சுவேட்டிங் மெத்தட். They are not one and the same, they are different. Am I making sense? Okay, we'll see in what way they are different when we go for the format category. And most important, if suppose the question remains silent, okay, most important, the note is, if question remains silent about the method maintained in the preparation of partner's capital account, then in such cases it is always fluctuating. Only. Is it clear to you? Suppose the question says very clearly in what method the firm is maintaining the capital accounts of the partners, then accordingly you will do the requirement. Accordingly, you will prepare the accounts. If they have not mentioned you anything, okay, whether it is going to be done in the fixed method or in the fluctuating method, the question is very silent without mentioning the methods, then in such cases you will always take it for granted as it is a fluctuating method only. Am I making sense to you? The reason is, in this method, when the method is not mentioned, you can only prepare the capital account. You may not have any information about current account or its balances. So only if you know the balance of the current account, you'll be able to prepare that particular ledger. Point number one. Point number two, if you are going to, okay, go ahead with maintenance and the fixed method, when the question remains silent, it is a time consuming process where you need to prepare two ledger accounts. So rather, you can go with this method where you need to prepare only one ledger account. So it is a time saving one also. So one from the perspective of the requirement of accounts and its information. Second, with respect of time management, so it is always advisable to go only with the fluctuating method when the question remains silent. But if the question has specifically mentioned it has to be prepared by adopting the fixed capital method, then no other go, you need to follow fixed capital method. Or if the question says very clearly, following the fluctuating capital method, you need to prepare the ledger account, that is partner's capital account. Then according to that method, how many ledgers to be prepared, those ledgers you will have to prepare it. Hope I am making sense to you. Are you able to get my point? Right. Next, what has been given? Let's see. It is mentioned very clearly that under the fixed method and fluctuating methods, next, salary or commission to partners. This is what we have discussed. What is the name given for this? Salary and commission form part of? Exactly, good. It is a part of a remuneration to the partners. Next, we'll be learning something called as interest on the partner's capital, which we have also discussed. Okay, in what? In the list of items that has to be prepared in P&L appropriation account, profit and loss appropriation account. And also, we are just given you what is this interest on partners drawings. You know what is drawings is? Drawings is nothing but an any amount or the value of goods withdrawn by a proprietor from the business to meet their personal expenses is called as drawings. So you know very well drawings can be in the form of cash or in the form of kind. If suppose you have withdrawn some goods or if you have withdrawn some money from your business to meet your private expenses or personal or domestic expenses, we call them as drawings. And if the business is insisting that if any partner has withdrawn some amount for meeting the personal expenses, then they will be charged. That means they will be asked to pay something called as interest on the drawings. So we'll be seeing what is the interest on drawings. Drawings, when you do it, you have to refund the money back. For example, for any emergency, from my business cash box, I have withdrawn an amount of rupees 10,000. Now, it is my duty to repay the 10,000 rupees back to the business once I get the amount from some other source. But it is not going to stop only with just refunding the amount back. It also add one more concept to it, that is interest on that particular drawings. So interest will also be collected on the drawings. You will be learning about it. Remember, interest on the partner's drawings is considered to be as an income. Okay, interest on the partner's drawings is considered to be as an income to the business, whereas it is considered to be as an expense to the partner. So as I said, it is the only chapter, that is partnership is the only chapter where we will find or where we will analyze a particular item from the two different point of views. One from the point of view of the business and another is from the point of view of a partner. So for business, if you see, interest on drawings is an income, whereas for a particular partner, this interest on drawings is an expense. In the same way, interest on partner's capital, if you take into account, the interest on partner's capital is an income to a particular partner, whereas it is an expense to the business. Okay. Good morning, Ma. Okay. I just started the concepts. Anyway, don't worry. I'll give a run through a process walkthrough whatever I discussed so far once I complete this particular concept. Okay. We are not gone into the numerical problems as of now. We are just discussing about the theoretical aspects and then we'll move on to the problems. Okay. Right. I think you can unmute your mic. Sorry, you can mute your mic, Anna. Hello. Yeah, it's better now. So if you have any, okay, if you don't have a clarity in a particular concept, you can unmute your mic and you can just give your requirements, or you can just make it clear what you have understood. Okay, or if you want me to repeat it, yes, you can just unmute your mic and let me know about it. Or if I am going faster, yes, please do stop me. Okay, to go slow, no issues. So, as we're discussing about the term called interest on partners' capital, so interest on partners' capital will be considered as an income to a particular partner, whereas it is an expense to the business, that is firm. Whereas interest on partners' drawings is vice versa. It is an income to the business, but an expense to the partner. And then comes adjustments for incorrect appropriation of profits in the past, which we call them as past adjustments. So some errors would have taken place. Okay, as you know, okay, even though we follow a rigid accounting principles or policies, at times what happens is we may go wrong. That's what we are learned in 11th standard under the concept of your rectification of errors. Something would have gone wrong. Either totaling errors would have happened. If not, the error might have been due to the omission, commission, okay, all such things, or carrying forward, or principal errors, compensating errors. If in case any error that has taken place in partnership, for example, a particular partner is not eligible for interest on capital. Let me give you an example. A particular partner is not eligible for interest on capital, but we have allowed or we have provided some amount against interest on capital, then it is an error committed by the accountant. ஒரு பார்ட்னர் அவருக்கு வந்து இன்ட்ரெஸ்ட் ஆன் கேபிட்டலுக்கு எலிஜிபிலிட்டியே இல்லை. Say for example, there are three partners A, B, and C. A and B are the only partners who have contributed something called as capital. C is a person who has not contributed anything as capital. The business says very clearly partners are eligible for interest on capital. Now tell me, logically speaking, who will receive interest on capital? In my given example, there are three partners. I said A, B, and C. A and B have invested some amount as capital, whereas C has not even contributed 1 rupee as capital. The business says that partners are eligible for interest on capital at some percentage. Now tell me, from the given example, who has the right, who has the privilege to receive interest on capital? Who can receive the interest on capital? So accordingly, in this case, who are the one who has contributed capital? So suppose instead of providing the amount to A and B, if the accountant has allowed interest on capital to all the three partner A, B, and C, then won't it affect the profits of the business? Will it not affect the profit of the business? It will affect the profit of the business. பிகாஸ் கொடுக்கக்கூடாத ஒரு ஆளுக்கு நம்ம கொடுத்தோம்னா நமக்கு ஏர்ன் ஆகிருக்கிற ப்ராஃபிட் இன்னும் கொஞ்சம் குறையும். ஸோ வென் யூ ஆர் கோயிங் டு டிஸ்ட்ரிபியூட் யூ ஹேவ் டு பி வெரி கேர்ஃபுல். ஸோ தட்ஸ் வாட் யூ சே ஹியர் இஸ் some errors you would have committed, you need to adjust those, you need to correct those errors. That is what we have said here as incorrect. அந்த error தான் நம்ம இங்க என்ன word யூஸ் பண்ணிருக்கோம் பாருங்க. We have used the word adjustments. Okay, for incorrect, incorrect na error, incorrect appropriations okay, of profits in the past adjustments. That is in the earlier past. Last year, we would have done some errors or mistakes which would have come to our notice in the audit. So we might have not been in a position to take a corrective action during that year. So we need to correct it in the very next year. So for this, you will come across a topic called as past adjustments. The word says very clearly past. Past means earlier, adjustments, corrections. So using the concept of your rectification of errors, we are going to work out this chapter, but don't get okay tensed or don't get frightened. Aha, rectification of errors, I have not learned it properly, or I have not got a clear cut understanding about the chapter. It is not going to be like how it was in 11th standard. This is having a platform of that rectification of errors, but the accounting treatment is entirely different. You're not going to follow like preparing the journal with suspense account, or the three different levels of entry: correct entry, wrong entry, rectifying entry. All those things we are not going to work out here. We are just going to follow a table, and the table will give you the required answer once if you have completed everything properly as per the procedures. So you do not get okay frightened. Like 11th standard மாதிரி இருக்க போத journal entry போடணுமா, எத்தனை journal போடணும், suspense account போட்டு போடணுமா, suspense account போடாம போடணுமா, those okay thoughts you need not have in your mind. It's very simple. I am saying very clear, it is just having a plan, okay, traces, that to 5 to 10 percentage, not even 100% traces, just a 5 to 10 percentage traces you may find when you prepare this particular concept. And then finally you can see the term called as guarantee of profits. So what is a guarantee? A promise. So you're giving a promise about a profit. To whom you're going to give a promise to the about the profits? To the partner. But this concept called guarantee of profits, where you'll come across two things. One is a partner is giving a guarantee to another partner, or a partner is providing a guarantee to the firm. Now, you may come across, sir, I have found in many places you're using a term called firm, firm, firm. What is it is all about? Let me make it understand to you. In sole proprietorship, it is only one individual who's running a business. So we don't use the term called firm. We make use of a term called business. Okay. Or we'll say in his concern, business concern. We never come across a word called firm, because partnership is entirely different from sole proprietor. And in sole proprietor, we use the term like X capital, Y capital. But in partnership, we'll use a term called partners capital. That makes some differences. Now, what is this firm is? It's very simple. Okay. In a partnership business, say for example, you got three partners. Okay, there are three partners named as A, B, and C. These three members are partners. They are going to start a business called as ABC and Co. This is the name of the business. And what form of business, if you see, okay, it is coming under partnership. Okay, forms of businesses you learned in your grade 11 BST. So, as per the form of business organization, it's a partnership business. The name given to the business ABC and Co. And then the name of the partners are A, B, and C. Now, individually, okay, when you see individually, A is a partner, B is a partner, and C is a partner. That's why we have said, okay, partner names are A, B, and C. So individually they are called partners. Now you have clubbed those three A, B, C, and co. So collectively they call them as firm. So we call them as business firm. Okay, so individually they are called as a partner. Collectively we term them as a firm. So that's the difference between partner, partnership, and firm. So partners are the name of each individual in the business. Partnership is a form of business organization, and the term firm is nothing but it is a collective of partners. So individually they are partners, collectively they are firm. Am I making sense to you? Can you able to understand? Can are you able to? Okay, right, fine. So just to sum up what we just discussed, we are learned or we are just discussing something about what we are going to learn in this chapter called partnership basic fundamentals. So, meaning and definition of partnership, we are going to learn it. We are going to read or we are going to understand the essential features or characteristics of a partnership. Then we'll be learning something called rights of a partner. So, what are all the rights and even duties? Not only we are going to restrict the rights, we are also going to see the duties of a partner. Okay, so meaning, features, and then rights. And then we learn something called as partnership deed. What does it mean? And what are the contents of partnership deed? The term clause, okay, the clause is nothing but it is representing the contents. Okay, this represent the contents, items pertaining to partnership deed. And followed by that, you will be having something called as provisions of the Indian Partnership Act 1932, okay, in the absence of a deed. And then you will be learning something called as interest on the loan when it is being offered by the partner to the business and business provide firm providing the loan to the partner. Don't use the word business, use the word firm. You can see here interest on loan by partner to whom? To the firm, and firm to partner. So that's what I made a clarity over there. What is a firm is all about, or who can be called as a firm and who can be called as a partner. Individually, they are partners. Collectively, they are called firm. Right. The next you can see here distribution of profits or even losses among the partners. Okay, by using an account called as profit and loss appropriation account. So here, as I said, profit and loss appropriation account is nothing but it is an account which has been prepared exclusively only in the partnership business. Okay, I repeat it. It is an account which has been prepared only in the partnership business. So in partnership business, an account called as profit and loss appropriation is prepared. The purpose of this account is prepared is for distribution. For distribution purpose, we are preparing this account. And what does it consist of? It consists of the profit which has been earned or loss which has been suffered that has to be distributed. In addition to this, you have these items which we are going to discuss is the treatment of interest on capital, the treatment of interest on partners' drawings, partners' remuneration. Remuneration is nothing but it consists of these two aspects or two items. They are salary and commission. So a partner will be eligible to earn a particular amount as salary or as portion as commission. In some rare scenarios, an individual partner will be allowed to earn both salary as well as commission. So it is not an hard and fast rule that any one only should be allowed to a partner. We can't allow both, nothing like that. You can allow both salary as well as commission also, or you can allow only salary to a partner, or you can allow only commission to a partner. Okay, so this salary and commission is forming part of your remuneration. Okay, this is a term that we have to use it. When they use the word salary payable to a partner, then they are touching upon the concept of remuneration. What is a technical term given for that? So salary சொன்னாலும் சரி இல்லை commission சொன்னாலும் சரி அதுக்கு என்ன ஒரு technical term? It comes under remuneration. What is it called as? We call them as remuneration. Okay. The next one is transferring the amount to general reserve. So what is the general reserve and why to transfer the amount to general reserve? Everything we'll be learning it in detail, right? And then we have just discussed something about the preparing the partner's capital account. So in partnership business, the partner's capital can be maintained in two methods. Okay, there are two methods in maintaining the partner's capital account. One is the fixed method and other one is a fluctuating method. In fixed method, you have got two subledgers to be prepared. Okay, in fixed method, you need to prepare two ledgers, whereas in fluctuating, you have to prepare only one ledger. What are those two ledgers if you ask me? In fixed method, you have to prepare something called partner's capital account and partner's current account. In fluctuating, you need to prepare only partner's capital account. And as I already mentioned here, okay, the word in both these accounts, you find one thing similar or common, partners capital. But please, these two partners capital are not one and the same. They are not same or similar. They are entirely different. So the format of partners capital account under a fixed method is entirely different from that of the one which we are going to showcase or prepare it under the fluctuating method. Probably one or two items can be the same, but not entire format. Okay, so please don't get yourself misunderstood. Read the question and then take a call. Suppose if the question is silent, okay, if the question remains silent in with respect to the method what we are going to prepare in the maintenance of partners capital. Okay, if it has not been mentioned in the question, then it is always taken for granted we follow fluctuating capital only. Okay, so if suppose it has not mentioned to you in the question about the method of maintenance of the capital, we follow that the firm is adopting fluctuating capital method. Am I making sense to you? Can you able to understand so far? Any doubt? Okay, so just a minute. Okay, the next one, if you could see, we are going to learn some important definition and also some important act, and also we are going to discuss what is the provision of Indian Partnership Act 1932 talks about. So basically, you can take the definition of partnership is as follows. So, meaning, if you ask, it is been said very clearly that partnership is being defined by an act which we call them as Indian Partnership Act 1932. And in that, you have a particular section that we call them as Section 4. Okay, so Section 4 of Indian Partnership Act 1932, it defines about the partnership business. They can give you in match the following also. On one side, they may give you Section 4 Indian Partnership Act 1932. Okay, one side they may give you Section 4 Indian Partnership Act 1932. On the other side, they may give you either definition or they may give you the statement as definition of partnership. Or it could be the other way also. One side they may give you Section 4, okay. On the other side, they may give you Indian Partnership Act 1932. Like that also you may able to match it. So you should know very well that which section, which act that is going to define the partnership. So partnership is defined by Indian Partnership Act 1932 and the section is section 4. Let's see what is the definition of this particular partnership business all about. Partnership is the relationship between persons. Here they use the word plural persons because to start a partnership business you need minimum two person and maximum is 50. So that's why they used a plural form. Okay, partnership is the relationship between persons who have agreed to share profits of the business carried on by all or any of them acting for all. What does it mean, sir? Okay, suppose there are three partners A, B, and C. All the three partners are actively involving themselves in the business and they take over the business activities. Then we call them as it is a business or it is a firm run by A, B, and C under the partnership form of business, and the business is being carried on by all. That means everyone is having some responsibility in the business, so we call them as business carried on by all A, B, and C, or any of them acting for all, which means among this A, B, and C, suppose A and B have just only literally financed, they have just contributed some money to the business. Okay, they don't know what to do in the business, they remain silent. You'd have learned this even in your BS 11th standard. Okay, partners for profits only. Okay, that means they will not take part in the business, they will just lend the money required for the business. That is, there will be a financing partner, or we call him as a sleeping partner. Okay, so in that case, what happens? A and B have just contributed the funds for the business. C is the one who's navigating the business to the next level. So that means C is acting for all. C is not going to do all the activities for himself. He is going to do the entire activity for the business as a whole. That means C is running the business on behalf of A and B along with his presence. So we call it as business is being carried on by all or any of them acting for all. So in the second example, as you could see, okay, C is acting for the remaining two-person A and B. So in that category, if you see, it comes as carried on by some other persons, any of them acting for all. So the definition stands very simple and powerful. It says that partnership is a relationship between the persons who have agreed to share profits of a business carried on by all or any of them acting for all. Any discrepancies or any what say issues that you find in understanding this concept of partnership, the definition of partnership? Right. The next comes is a partnership. Thus, it's a relationship between or among two or more persons. Now it talks about the meaning. Okay, where you have two or more persons to share the profits and losses of the business that has been carried on by all or any of them acting for all. This is what you learned as a feature that what's the feature? A partner is acting on behalf of others. That means it has a relationship, principal and agent relationship. Hope you remember what you learned in your 11th BS. Right? There is one topic or there is one feature called as okay, principal and agent. A partner, okay, he works as a principal and also as an agent. That means if he is going to act on behalf of others, then we call him as he is a principal and agent representing all the other members. And here comes the most important thing as partners, firm, and firm name. This is what I have just given you an example. Okay, like A, B, and C are partners. They are setting a name of the business as ABC and Co. And then collectively they are called as a firm. Individually they are called as a partner. So here you can see the persons who have entered into partnership with one another individually are called as partners. Collectively they are called as a firm. The name under which they continue the business called as firm name. Hope it gives you a clear understanding about what is the definition of a partnership is all about or a meaning of a partnership is all about, and the clear cut distinction between a partner, firm, and firm name. Any doubt until this? Right. Next, the most important, the essential features. Okay, some initially it will be having some theoretical concepts. Okay, for one or two classes we'll go, we have to understand the theoretical concept to work out the practical problems. Then onwards we'll start with the numericals, because straight away if I go to numericals, obviously I can able to give you the summary of what needs to be done, but you may not be able to capture what this is all about. So only if you have a clear cut understanding about what it is and how it works out, what needs to be done, everything, then while working out a problem you will have a detail or a broad vision. Okay, or else you will have only a narrow vision as of now. Right, coming to the essential features, so that means characteristics, or we can say it of a partnership. The first and foremost is two or more persons. So the definition of partnership it says or meaning says it is a business where two or more persons are involved. That means two means it's a minimum count, more is a maximum. We should know what is it maximum. There should be some minimum and maximum count, okay, for any business. So here you could see there must be at least how many persons? Two-person to form partnership, and all such persons must be how they have to be. They must be competent to contract. That means they must have a sound mind. That means they should not be a mentally retarded, or they should not have any problem in their mind, or they should not have be a bankrupt, okay, insolvent, as we say. A person whom going to start a partnership business must have sound mind. At the same time, okay, they should not be a person who's not competent to a contract. Now it says very clearly according to what act? According to the which act? Indian Contract Act of 1872. Earlier to this, we learned one act. What was it act? Indian Partnership Act. Okay, one is Indian Partnership Act. What is the year of this act? 1932. And now, what is the act that you're learning here? Indian Contract Act. What is the year they are given here? 18, 1872. Okay, so please have a clear cut understanding. Okay, there are some years and there are some sections even in accounting. You have to be very strong and you have to be very, what say, clear in this years and act. So Indian Partnership Act that governs the partnership business, Indian Contract Act that governs the contract and agreement that takes place. So why to have these two acts? One is for the business purpose, the other is for execution of the contracts. Okay, so according to this act, Indian Contract Act of 1872, every person, okay, every person except the following is competent to the contract. Who are they if you ask? Person of unsound mind and person that has been disqualified by any law. That means if a person is a lunatic, lunatic is mentally retarded or a special persons, or he is a bankrupt. Bankrupt is not a lunatic. Okay, if he is coming under this disqualified by any law. So if he is a bankrupt, then the law will disqualify him. So these are the requirement as per the Indian Contract Act. Now that talks about the minimum and the maximum limit. We are saying that minimum you should have two persons, but let's see what is the maximum criteria. Maximum number of partners. Partnership Act 1932 does not prescribe the maximum number of persons in a firm. அப்போ நமக்கு ரெண்டு ஆக்ட் இருக்கு. இன்னொன்று இருக்கு இந்தியன் பார்ட்னர்ஷிப் ஆக்ட், ஒன்று இருக்கு இன்னொன்று இந்தியன் கான்ட்ராக்ட் ஆக்ட் இருக்கு. Indian Partnership Act is not restricting you, or it is not insisting you the maximum number of members. Listen carefully. Okay, that's what they said very clearly over here. Okay, they say very clearly the Partnership Act 1932. That means Indian Partnership Act 1932. Okay, Partnership Act 1932 does not prescribe. That means it is not enforcing, it is not insisting any such type of restrictions with respect to the maximum count. Okay, the Partnership Act 1932 does not prescribe the maximum number of partners in a firm. Then who's insisting this rule? However, okay, it is mentioned very clearly. However, Companies Act of 2013, Section 464. Okay, so now you are coming across one more act that is called as Companies Act of 2013. So Companies Act 2013. Okay, it is not stopping with this alone. It is further adding some information, that is section 464. Okay, so according to section 464 of the Companies Act of 2013, we have got some restrictions with respect to the maximum number of members that can be allowed in a partnership business. So, which act is not enforcing that restriction? Indian Partnership Act is not enforcing that restriction. It is a Companies Act of 2013 that is enforcing the restriction as per section 464. Please keep a note of these important sections and these important acts. Okay. So accordingly to this particular one, 464, employees, sorry, not employees, empowers the central government to prescribe the number of partners, okay, in a firm, subject to a maximum count of 100. So they are just prescribing that it should not be beyond 100. So they are giving some powers, okay, empowering that it can be up to 100. Now what happens is the central government has prescribed the maximum number of persons in a firm to be 50. And this is through what? Through the Rule 10 of Companies Miscellaneous Rules 2014. Okay, so what happens? Indian Partnership Act is not insisting you to frame any maximum number of members. It is only the Companies Act of 2013 that is insisting to have the maximum number of members, and they have provided the rights to the central government to prescribe it, but it should not cross 100. The central government is freezing with 50 as a limits, that is based upon which rule or what act. If you ask, it has been prescribed as 50 based upon the Rule 10 of Companies Miscellaneous Rule 2014. Okay, so now you can see the maximum is restricted to 50 as per what aspect and as per what act? As per the Rule 10 of the Company's Miscellaneous Rules 2014. Okay, so this 50 is based upon what? It is based upon Rule 10 of Company's Miscellaneous Rules. Okay, that is very important. Okay, Miscellaneous Rules 2014. Can you able to have a difference between these acts and sections? So Indian Partnership Act 1932, it is governing your partnership business. Indian Contract Act is there to govern the contracts, the agreements that is formed in the year 1872. And Companies Act 2013, Section 464 is insisting upon, okay, to have that maximum limits, and they are given the prescription of 100 as a maximum to the central government. Based on this recommendation, the central government has fixed the maximum number as 50. That is based on Rule 10 of Companies Miscellaneous Rules 2014. Am I making sense to you? Can you able to understand? Can you able to understand? So this is very important to know, sir. End of the day, it means like 2 is the minimum count and 50 is the maximum count. Yes, the concept says very simple. In partnership, the minimum is 2 and the maximum is 50 members. Okay, this is the limits. But from where you derive this, that is very important. Okay, though you can just say it very simply, 2 is the minimum number of members and 50 is the maximum numbers that can be accommodated in a partnership firm. But you should know which particular act has emphasized or which particular act has taken this call or a decision. So for this, you are coming across these 3 to 4 important acts sections all and year. Indian Contract Act of 1872, Indian Partnership Act of 1932, Companies Act of 2013, 464 section, and then maximum is restricted to 50. Okay, as per the recommendations of the central government through the Rule 10 of the Companies Miscellaneous Rules of 2014. Any doubt as of now? Right. The next you can see there is something called as a minor as a partner. As you know very well that any person who has not attained 18 years of age, they are considered to be as a minor. So in a business, there arises a question that can a minor be admitted as a partner? Yes, a minor can be admitted as a partner, but you cannot extract any work from that particular partner, but he can be admitted as a partner for the benefits of the business. Okay, that means he can be admitted as a partner to enjoy the benefits of the business. For example, A, B, and C are partners, okay, who are running the business for more than years, okay, 5 years, say for example. Among these three partner B has got a son, okay, partner B has got a son and who's a minor, that is he is aged about 14 years old. All of a sudden partner B demised, that is he has died due to heart attack. Okay, there are three-person A, B, and C. Partner B has got a minor son that is aged of 14 years. All of a sudden partner B died due to heart attack. Now the entire family of B has come to a question mark because B was the only earning person for the family. The other members have not done anything. Okay, they're not gone for any job. Okay, or they don't know. Okay, to whom to approach. All such things. Until B was there, he was running the family. Once B demised, now the entire family has come to a okay question mark. Suppose A and C, okay, because A, B, and C are partners, B has died. So now the remaining partners A and C, A and C can admit the minor son of partner B into the business for the benefit of the business. That means during that particular year, if the business has earned some profit, then from the profits, they can provide some share to that deceased partner B's son and their family. This is purely based on minor as a partner. So in a business, a minor can be admitted as a partner, but how long it can be allowed? இது எவ்வளோ காலத்துக்கு நீடிக்கும்? Until that particular minor partner attains the position as a major. Okay, until the minor becomes a major, okay, it is permitted. Once he becomes a major, okay, he has to give his consent. He has to give his interest whether he want to continue in the business as a partner or he don't want to continue in the business as a partner. Suppose if the particular minor, once attaining a major, is not giving his interest or concurrence, whether he want to stay back in the firm or to get out of the firm, then in such cases it is taken as granted that silence is a word of acceptance, that he is going to remain the business, and from there onwards, whatever the firm has a liability, whatever the amount due by the firm to the outsiders, in that even this minor partner will be given a share to take part it, because now he has become major. ஸோ சப்போஸ் இப்போ ஒரு பார்ட்னர்ஷிப் பிஸ்னஸில் ஏதோ ஒரு பார்ட்னர் செத்து போயிட்டாரு, செத்து போன பார்ட்னருக்கு மைனர் சன்னோ டாட்டரோ இருக்காங்கன்னா அவங்கள பிஸ்னஸில் இல்லை ப்ராஃபிட்ஸ் பிஸ்னஸில் இருக்கிற பெனிஃபிட்ஸை என்ஜாய் பண்ணுறதுக்கு அலோவ் பண்ணுவாங்க. அந்த பெனிஃபிட்ஸை எதுக்கு என்ஜாய் பண்ணனா அவர் மைனர்லேருந்து மேஜராக கன்வெர்ட் ஆகிற வரைக்கும் பண்ணலாம். ஒன்ஸ் அவர் மேஜர் ஆயிட்டார்னா அப்போது அவர் என்ன பண்ணணும், அந்த இன்ட்ரெஸ்ட்டை தெரியப்படுத்தணும். They have to express their interest whether they want to continue in the firm or not. சப்போஸ் எதுவுமே தெரியப்படுத்தலை, அவர் இருக்கேன்னு சொல்ல இல்லைன்னு சொல்லலை, எதுவுமே சொல்ல, அது என்னவாயிடும், it will be taken as a granted that they are accepting to be in the firm. This is point number one. And the second point is, once if it has been taken as granted, from that date onwards, whatever the liability the firm has got to the external people, that is outside people, in those liabilities, even this partner will have to contribute. That is the rule says. Okay, now you can just see here, okay, about the minor. A minor can be admitted as a partner. That is, he can be a partner in the firm only in the profits of the firm. That is only for the benefits of the firm, not in the losses. A minor partner on becoming major should accept or refuse the partnership, and that you have time period within how many months, within 6 months. So from the date you become a major, 6 months time period is given to you to take a decision whether you want to continue in the business as a partner or you want to withdraw yourself from the business as a partner. If he or she does not decide, that means he are not given any decision about their continuity in the business, then he or she will become liable for all the actions since he or she became partner. அது எப்படி சார் பாசிபிள் ஆகும், நான் தான் எஸ்ன்னு சொல்ல நோன்னு சொன்னேன். சைலன்ஸ் இஸ் ஆல்சோ வேர்ட் ஆஃப் அக்செப்டன்ஸ் தட் யூ ஆர் அக்செப்டிங் தி பார்ட்னர்ஷிப். Okay, so if you are a minor and if you are given a privilege to become a partner in your family's business, if it is run on partnership, then remember, once you attain the age of major, that is 18 plus, then in that situation, you have to give your interest to continue in the business or not within 6 months time period. If you fail to do so, then you have to regret it, provided if you are getting losses. If you are getting profits, that's something different. But when loss arises, you can't escape out of it, you have to meet those losses. And then comes about agreement. So agreement is nothing but partnership, okay, comes into the existence by an agreement. That agreement can be either what, in a written form, or it could be in an oral form. It is the basis, okay, it is a basis of the relationship among partners, which may be for a particular, okay, venture, or it could be for a period, or it could be at will. So that means when you're forming a partnership business, you need to have something called as an agreement. That agreement can be either in an oral form or it could be in a written form. If it is in a written form only, we call them as a partnership deed. Okay. Whereas a partnership deed can be either oral or written. That is not an issue. But the written agreement, we call them as a deed in general. Okay. So here comes the written agreement among the partners is known as partnership deed. Right. The next comes about your business. Partnership is established for a business purpose. And profit sharing is very simple. The agreement between the partners or among the partners should be to share the profits and losses of the business. So the ultimate objective of setting a partnership business is to share the profits and losses that is arising out of the business activity. So it should have been mentioned very clearly in the agreement in what ratio you are going to share the profits and losses. And yes, of course, the last point where you have is business can be carried on by all or any of them is acting for all. That's what we are discussed in the definition. So what does it say? Business of the partnership can be carried on by all partners or any of them can act for all the other partners. In other words, what does it mean? Partner are an agent as well as a principals. There's a relationship that is existing between the partner. Okay, that means he is a agent as well as a principal. That is a relationship. Now, what does it mean as an agent and as a principal? As an agent, okay, B represents, okay, other partners and thereby binds them through his act. So if you are going to act as an agent, then whatever that you do is as an individual that will affect, that will bind the other partners also. That's what we say. The act of one partner will affect the entire partnership as a whole. That's what we say. It will bind the entire partnership as a whole. If you are an agent, and as a principal, okay, it is very clear he is bound by the act of other partners. Okay, so as a principal, the other partners act will also, you are responsible. So in this way, the act of one partner will bind the entire partnership as a whole when you act as an agent. Similarly, when you act as a principal, okay, the you're responsible, okay, accountable. You're bound to be accountable by the act of other partners. So, with this, I stop today's session. So, today we discuss some important aspects like what is this profit and loss appropriation account is all about, why do we prepare the profit and loss appropriation account, and then what are the contents that will be okay mentioned in the partner profit and loss appropriation account, and some examples. Okay, if you are an equal partner, how to distribute the profit. If you are agreeing to share the profit and loss in some agreed proportion, how to distribute the profits. Okay, and also we have discussed about a case whereby preparing the partner's capital account, and individually how to denote a person as in partnership, collectively how to call them as, and the business name means what it is, and then the different acts what we have, okay, for each and every business. Indian Partnership Act is there to govern the partnership business, Indian Contract Act to govern the agreement, and Companies Act 2013 is for the companies. And each of these acts is also emphasizing about your minimum and maximum number of members, whether they recommending it or not. So according to the Indian Partnership Act 1932, there is no maximum limits. It is only the what Companies Act of 2013, okay, is insisting to have the maximum numbers through Rule 10 of the Companies Act, Companies Miscellaneous Rule 2014. We have framed as 50. So from which number to 50 we have come up? From 100 to 50. So it was insisting to have up to 100, but we are not taking 100. We are restricted to 50. So that's why we say it is minimum 2% and maximum is 50 members in a partnership firm. And the important section is section 464. So 464, right? And we also discussed something about your methods of preparing your partner's capital, fixed method, fluctuating method, and what are the accounts that needs to be prepared under these two methods. We have got some clarity, but of course we'll see in the upcoming days the formats and the accounting concepts. So any doubt so far? Any doubt? There's no doubt. Fine. Thank you all. We'll see whether if there is a possibility to have a session in the evening. We'll have an evening session also. I'll let you know the timing. If not, we'll have a session tomorrow. Thank you.